let me just on one point that I'm glad you brought up 2008. When that happened, when the price fell from 1,000 to 700 in gold and 21 to 9 in silver, what was very interesting in my market was that there wasn't an ounce of gold or silver to be found for the second half of the year anywhere. I thought we were going out of business, and I'm dead serious. In 2008, the U.S. Mint shut down a half a dozen times. The Perth Mint in Australia ran out of product for the first time ever, took no new business after August. The Rand Mint in South Africa was cleaned out. One wealthy Swiss businessman flew a 747 there and cleaned them out for the first time ever.
Something big just shifted in the global financial system, and the signs are far louder than anything mainstream media is reporting. Japan, for decades America's most reliable financial partner, has just rejected U.S. pressure and is unwinding more than $1.1 trillion in treasuries, helping trigger one of the weakest U.S. bond auctions in years. At the same time, COMEX silver inventories continue to drain, backwardation is becoming persistent, and central banks around the world are quietly buying gold in quantities they aren't even reporting. These are not normal signals. These are early warnings that trust in the dollar-based system is breaking down. Andy Schectman, one of the most experienced wholesalers in the precious metals industry, says what we're witnessing today feels eerily familiar to 2008. But this time the stakes are much higher. From failing Treasury demand to disappearing physical silver to stealth gold accumulation, the world's biggest financial players are preparing for something major, and the public has no idea it's happening. In this video, we break down exactly what shifted, why it matters, and what this means for anyone holding dollars, stocks, or paper assets.
The Canadian Mint, the Australian Mint, and the Canadian Mint, the Austrian Mint, and the UK Mint were working 24 hours a day, 3 shifts, 8 hours apiece, and they were as much as 12 or 14 weeks backordered across the board. And nobody, I mean nobody, sold anything. I am a authorized reseller of the U.S. Mint. They said, we will take no orders. We'll let you know when you can take it. And when they finally came back online, months and months later, into the fall, right around this time, they said, fine, we'll take your silver maple leaf order or your silver eagle order. With $9 silver, you're going to pay 18 or 19 bucks, and you're going to wait 8 to 12 weeks to get your product. You got to pay up front. And the same thing was true with gold. What I'm saying is it was a paper-derived smash-down drive-by shooting. And if you do that now with naked shorts when silver's in backwardation and the exchanges are being bled dry, that's exactly the environment that these traders across the globe are going to jump all over and say, fine, we'll stand for delivery. Where's the product? And that, to me, is an existential threat. And I wonder, is it true to you that the only way to manipulate a market is to push it in the direction that it is going? But when you throw in the delivery ability to stand for delivery, like we're seeing in silver and the chaos that's creating in both physical silver and in SLV, I don't know. I think it's something that these traders would need to think very, very cautiously about, because I can tell you in the physical world, there was not one person that sold anything and the price just cratered. So I don't know. It's nuanced for sure, but again, could it be different this time? Don't know. It feels it to me in my gut, but I defer to you guys. You have the career in technical analyzing these markets, and I respect that.
Yeah, I mean, Andy.
Yeah, well, I mean, look, I look at what's going on with the carry trade. You got Japanese pension funds pulling out 1.1 trillion out of U.S. Treasuries now because keeping money in America loses them money after hedging costs. And when you have Japan stop buying, interest rates wouldn't just stay flat; they would arguably explode. And I think that's the issue. When you have 1.2 trillion in borrowed yen funding crypto stocks, emerging markets, all this stuff has to unwind. And every hedge fund, every momentum trade, every leverage bet built on free Japanese money is getting margin called. I think it is a very important trade. And I don't know, December 18th is a big day for Japan. There's a 50% chance they hike again. So what happens then? I guess you could say the world's biggest piggy bank just got smashed a little bit. I don't know. It seems that way to me. It seems big, very big, and I would agree that it's probably bigger than people think. It's interesting because the public is really hasn't been a massive participant in the gold rally. It's been more along the lines of the central banks and whoever the heck is importing billions upon billions every month into COMEX, the sophisticated traders. Maybe it's some of the people listening to the chief investment officer of Morgan Stanley who said, sell half your bonds and put 20% into gold, or Michael Hartnett from Bank of America who said, no, make it 25%, or Jeffrey Gundlach who said, no, 25% is not overweight. Things I never, ever thought we would hear. I think the public is behind the curve. And if you look at the recent data, they're all in the stock market, highest ever, largest margin debt ever, largest option exposure ever. The public's in the market. The big money, the central banks, the commercial banks, the sovereign wealth funds, they're the ones that have been driving not only the gold accumulation, but the deliveries off of the exchanges. So I think the public is the last one to get involved, and really, other than some very large orders by people who are paying attention, I would say the public at large is not involved in this market hardly at all.
That's
Andy, can I ask you a question?
Here.
Do you mind if I ask you a question? Just to that end, interestingly, I think when retail really did try to get involved was when people were lining up in Australia and it was at that local top, right? So we saw that on the news, and I think that's classic market behavior. What do you think it would take for the classic 60-40, the RIAs in the world to finally decide, hey, we need some sort of allocation to precious metals, a 60-35-5 or a 55-5-50, whatever it would be? It seems very strange to me that even with this massive move on gold, you don't hear people advising retail to put it in their portfolio.
Yeah, it's strange to me too. I mean, maybe it's just been so whitewashed out of the ecosystem that they don't think about it. I mean, one of my very best friends is manages $3 billion for Morgan Stanley here in Boca, one of the biggest in the state. And he wouldn't know a gold coin if it fell on his foot, yet their chief investment officer is saying put 20% in gold. So I don't know. I think typically, and maybe this is why there's the whole theory of Elliott wave and Kondratiev wave theory, human emotions that drive the market. I think maybe they have to see it with their own eyes. But, people who are successful, I think, move before the trend. And that seems to me to be the central banks who've been doing this for the last 8 years, and now the sovereign wealth funds, and now the commercial banks. So I don't know. Maybe it just is validation they need to see with their own eyes instead of doing what the biggest money has been quietly doing for quite some time. And you look at how gold has performed. It's really done amazingly well and it's outperformed most assets. The fact that it hasn't been embraced, I don't know. It's a mystery to me, quite frankly. But I would think that it has to be validated by people's own eyes before you see anything substantive with the public or the local money managers or financial advisories.
I would also think that once it's fully embraced, that usually signals a top. So in the scheme of things, it's probably not even at the top yet, and it's got much more to go, right?
Yeah. That's the idea. I mean, that's kind of what I'm getting at, is that I just stopped talking about what I do with my friends unless I'm asked. By now, a lot of people know what I'm doing, but it's so misunderstood by even people who are very well read. Maybe they just read the wrong stuff. And I got another money manager, ironically from Morgan Stanley, lives across the street from me. And the only time he ever says anything to me is when gold and silver fall. You yell across the street from me, what's going on with metals? I want to just say, shut up, man. And he never talks to me about the fundamentals. It's buy bonds and retire, blissfully. I just think that it's been whitewashed so much to such an extent that the public doesn't quite get it yet. But you look at a market that, has doubled the performance of the 10-year Treasury over the last 25 years. You can take the S&P and with dividends reinvested, which nobody ever does over that same time frame, gold beats it just barely, 9.9 to 9.6. Look at it last year, up 60%, up this year, 60%. At what point do people start to legitimize it? I don't know. But ironically, if you take any asset you can think about, just about, and value it in ounces of gold, going all the way back since 1971, prices are falling in gold ounces. They're going way up in dollars. It just is continually outpacing people's expectations, but yet they don't even notice it. They don't acknowledge it. And here we are with it being one of the best performing assets of the last decade, and it's completely and totally underowned by the public for whatever reason, I don't know. I guess the only thing that really comes to mind to me when you talk about going back and looking what happened in 1980, at its previous peak, Volcker raised interest rates to 18.75%. That's not going to happen now. I don't know how many global rate cuts we've seen this year, 500 or more globally. The pattern is for lower rates, of course. At least that's what they want, and I think it's very different when you see countries like Poland, who started out with their target at 20% for national reserves, raised it to 25%, and now they're going to 30% national reserves. You look at the amount of gold that is being imported by the central banks. There was just an article that came out that said only 1 in 3 transactions is actually being reported. They're buying way more than they are telling all of the central banks. You look at the United States, we've become a net importer for the first time ever, and we're importing billions and billions and billions every single month. I think it is different this time because a system.
In 2008, when gold fell from $1,000 to $700 and silver crashed from $21 to $9, the headlines looked like a market collapse. But Andy Schectman says the real story was something entirely different. Every major mint ran out of product, dealers paid double spot, delivery delays stretched for months, and nobody sold anything because physical metal was unavailable. He says that moment taught him the rule that still guides everything today. In times of stress, the paper price is a lie. The physical market is the truth. And right now, he believes that truth is starting to break through again. COMEX registered silver inventories have fallen to around 27 million ounces, one of the lowest levels in over a decade. Backwardation has become normal, and more than 40% of contract holders are demanding delivery instead of rolling forward. Andy sees this as a direct warning that the system is losing credibility. Analysts outside the metals world point to SLV outflows, falling retail inventory, and rising Asian premiums as further proof that the physical market is tight. What concerns Andy most is the underlying psychology. When buyers stop trusting future delivery and want metal now, the system is already in trouble. At the same time, Japan has triggered a global liquidity shift. Japanese institutions have sold more than $1.1 trillion in U.S. Treasuries in just 18 months, because hedging costs turned them into guaranteed losses. Analysts warn that the unwind of the yen carry trade, which pushed over $1 trillion of cheap liquidity into world markets, is now reversing violently. This unwind is setting off margin calls in hedge funds, tech stocks, crypto, emerging markets, and commodities. With the Bank of Japan considering another rate hike on December 18th, Andy believes the global funding system could face even more pressure. Meanwhile, the United States is struggling to maintain confidence in its own financial structure. Over $600 billion in new debt has been added in the last 3 months. Interest costs have blown past $1.1 trillion a year, and more than $7.6 trillion in treasuries must be refinanced in 2025 at higher rates. The recent $22 billion Treasury auction failure confirms weakening foreign demand. Analysts like Jeffrey Gundlach warn that the U.S. could hit a funding crisis faster than expected. Andy's view is blunt. The world no longer trusts U.S. debt the way it once did. While retail investors chase stocks with record margin debt and oversized options bets, central banks and sovereign funds are preparing for something much bigger. They bought over 1,037 tons of gold last year, and the IMF revealed that roughly 300 to 350 tons were unreported. Silent accumulation. China quietly imports 80 to 120 tons a month. Poland has raised its gold target to 30%, and Turkey, Singapore, and India continue large purchases. Andy sees this as clear evidence of a global shift away from the dollar. To him, these actions reflect the core truth he repeats constantly. Gold is trust, silver is truth, and both are insurance against a system that may already be breaking. He believes the public will realize this only after the reset begins, and by then, the supply will be gone.
The United States, which has flourished, you go back to 82, interest rates fell at a 45-degree angle ever since, making traditional assets what everybody wanted, and this country was revered and trusted. And you look whether the repo market right now, where the banks aren't trusting each other because there's double the liquidity in there than we had it in 2019, and yet the Fed just came in with 125 billion over 5 days. That's crisis level. You look at the backwardation in the silver market. They don't trust that they'll be able to roll their contract forward and get it in the following months, or they don't want to cash settle. They want the metal now. You look at de-dollarization. You look at all of this stuff, it's all based upon a lack of trust, whether it be globally with the de-dollarization and the Treasury issue with sanctions and tariffs masquerading as sanctions. You look at all of this stuff, and I see an issue of trust and fiscal irresponsibility, where in 6 weeks that the government was closed, we added $500 billion in debt. The previous trillion happened in 71 days. A trillion seconds ago was 31,688 years ago. We're fiscally irresponsible. Nobody trusts us. The markets don't trust anyone. The banks don't trust anyone. This is a game that I think is about the United States has lost trust and the markets have lost trust. And even the participants in the overnight repo market trading 24 hours next day, not even just overnight. No, I don't trust you. So why did the Fed have to come in and put 125 billion in? I think it's different in the respect that you could argue if it were a chart that the US peaked on its way up to 2011 or 2020, and it started to come down. And that's kind of where we are now globally with the lack of trust. So to me, gold is trust. It's trust because it is not someone else's liability. It's an asset that has no counterparty liability if it's in your own possession. So I get it. I get why you would say that, because history hasn't been kind to gold. But I would argue maybe history won't be kind to the US dollar the way that it once was, or the desire to hold our treasuries the way that it once was. So I guess that would just be my own pushback. I'm not the guy to talk to when it comes to charts. I follow everything you're saying, and it makes great sense. But, maybe, and I'd like your point on this, Mike, and all three of you guys are technical analysts. I would argue that the metals markets have been, for a very long time, manipulated by the Western central banks, period. Is technical analysis valid in a market that has and has a greater amount of central bank intervention? At what point does that painting the tape or does the reading of the charts maybe not work out the way one would think?
You've just heard the signals that most people won't recognize until it's too late. Japan stepping back from treasuries, silver quietly disappearing from COMEX, central banks buying gold off the books, and U.S. debt accelerating past the point of sustainability. Andy Schectman's message is simple. The world is losing trust in the dollar faster than anyone expected, and gold and silver are becoming the safe havens of last resort. When confidence breaks, everything changes, and it happens all at once. So let me ask you directly. Do you think the world is preparing for a monetary reset, or do you believe the U.S. can still regain global trust? Let me know in the comments. I read every one of them. If this breakdown opened your eyes, make sure to like, subscribe, and share this video. It helps the channel grow and ensures more people understand what's happening behind the headlines. Stay informed, stay prepared, and I'll see you in the next one.